Guys, welcome back to the channel, welcome back to a new video. Hope you all had a great weekend. Today it is Monday, that means it's always a jam-packed episode. We are going to look at what we can expect for the entire week. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think they're useful. Now without further ado, let's start diving in, and we are starting off with BTC USD here on the 1 hour. And as you can see, we have some red and green areas in the chart. Those are the CME gaps, and right now we have a CME gap to the upside to approximately 23,500-ish. And Bitcoin is right now trading at 22,840 at and around the point of control of this range, and we have some interesting levels underneath us. I would say actually the most important one is just taking out the liquidity underneath and to then go higher. So where the arrows are right now, that is those are the liquidity levels to take that out and then go higher. This candle right here just took out the liquidity here, so it's just a slight lower low. We could also first go to the value area low and then bounce up again, but like I said, the most juiciest trade would really be take out the liquidity and then to move higher. We can also of course move higher from here. Then we also have a few very nice levels above us. Yes, we have resistance from the value area high, but if we are able to break it, then we have the golden pocket measured from the current bottom here until this top. Oh, I should redraw a little bit like this, and then we have the golden pocket here at 23,685 to 23,733, and that's kind of coinciding also with these candles right here, or the 78.6, which actually is also super nice. Those are the high here and some candles here. The only thing is that the volume in this area is not so thick, so it could be that there's not a lot of resistance once we get there, and then we just go higher and take out this high right here at 24,250. If we do so, this is that major block then that we are looking at, with the top being at 25,200. This major block, in case you missed it, is this area right here where we topped out in many days. And that's then kind of where I'm looking at. This kind of a big area, but that is the area then that I would definitely be looking out to short if we maybe not already get a retracement. If we do get a retracement, then I'm still looking out for this lower area right here at 21,477 until approximately 21,200 to 21,000. That kind of also lines up with that value area high. I prefer even lower to fill eventually here the CME gap, but that is still quite some space to go. Like this move in itself is already 6%. For now, I do think that we might get a little bit more move to the upside, not only to fill the CME gap, but you can see that we are already spending quite some time here at the bottom. Usually then eventually it will reverse. This might even print for us a bullish divergence on the 1 hour. That usually has some follow through, so I do think that we might go up. I also saw on the 4 hour that we are slowly curving here to the upside. Finally, we are seeing that the money flow is slightly in the green. If you may remember from last week, we talked about this bearish divergence here on the 4 hour. It was quite hard actually to trade, because you just had a red, a green and a red dot, and then here again green, red, green, red. So if you're just using that already as a signal to be cautious or enter trade or whatever, then that was a pretty confusing time. Eventually, so far we went down 4%, so quite nice. If you took the trade, I didn't, especially because I was just a little bit insecure about the money flow. I thought actually at some point that we were curved back up again, especially when we were hitting this value area high right here. Thought that's a nice place to bounce, and then we go higher again. So if you then don't have an entry that is really here on the top, then it's just a matter of time before you get wicked out pretty fast. So again, these are levels for BTC that I'm looking at. Then ETH, I would say that actually for ETH it's even better than it is for BTC. This is on the 4 hour. We have these levels underneath where also the liquidity resides, as you can see, so that looks pretty good. We're a little bit of no man's land when it comes down to the volume profile, not at the value area high, not at a point control, so we kind of want to wait what BTC does, and usually ETH will follow. We are at and around still that golden pocket where we have been trading already for a while, but if we move the FIB retracement actually one stage higher, so not from this high right here, but to this candle right here, so that's, so we say, the first significant high after the drop, then you can see that our next target for a golden pocket also lines up with that 1790, which then that 1790 is the top here. So there you can see that there's quite some confluence. So if we are going higher, then expect that 1790 would at least give some resistance, because it's the next golden pocket, and also another 10% move up. If we go lower from here, then we still have the golden pocket that we already talked about last week, starting off from 1365 to 1347, let's say 1340 or 30, because that then also coincides with this high right here, the cluster right here, and you have your golden pocket. So don't take that for a dollar more or less, just see it more as ranges, and in that range then you want to see your confirmations, maybe a W pattern, bullish divergence, money flow curving back up, maybe a trigger wave, momentum waves, whatever then your confirmations are that you are looking at, but this is kind of what you want to see once the price reaches your level. This is the S&P 500, or at least the futures market, ES1. This of course is important because we do see a lot that the ES1 does the opposite of the dollar index, but Bitcoin moves a lot of times in sync with the ES1 or the S&P 500. So once this goes up, BTC goes up, and then also ETH. So it's kind of a train or a domino, as you could say. If one moves, then the other moves as well. Looks like we are finally coming down here a little bit. That 4,171, that was an important level. We now are kind of coming down. If we are really zooming in, then we can see that the area where we are right now is exactly the golden pocket, measured from this smaller area to the high, back to the golden pocket. I actually, on the macro, would be more interested in a much deeper level, something like here. Then the golden pocket would kind of line up almost with this support and resistance line that came in already since beginning of 2022. But the major one would actually maybe be here, the golden pocket here at 3900 and what should we say, 40-ish, measured from this low to this high, and eventually to maybe trying to revisit that 3500. So far, just had a quick look, S&P 500 is already up more than 7% for the year, and the Nasdaq already produced more than 14% return of the year, and that within 5 weeks. That at least tells me this is absolutely unsustainable, and you can't do this for 2-3 months in a row, and therefore I think it is due now finally for a correction. And who is usually leading the dance when it comes down to these kinds of things? Exactly, the dollar index, and that's what you're looking at right now. This is then finally, maybe, I hope so, our major bullish divergence playing out for the dollar index. This is on the daily, and it's maybe a little bit colorful, but I have two FIB retracements. One is measured from this wick high to the low, then we're almost there at 103.8. I definitely think we can make it soon. After that, I want to see this high be taken out, and you could say, oh, maybe this or this one, but the real gem is then here to the upside, 109.5 to 110. That is the big golden pocket, really measured from this high to this low, back to this golden pocket. If this one has been taken out, you can see that the 78.6 is very close to this next support and resistance level, 111.7, and then of course these highs. I also wouldn't be surprised if we maybe rally up in the next couple of weeks to take out these highs, and then eventually to go lower again. For now, especially with these candles and the force that we are going up, it looks pretty good for our bullish divergence scenario. Don't be mistaken, we could have 1 or 2 red days, but eventually you'll want to see that this is really the low, and higher low maybe, or this thing just absolutely skyrocketing and just going higher. And of course, then you know that stocks will sell off, crypto will sell off. We finally get our retracement that everyone is kind of waiting for. Don't get fooled by just one day, because this also took months to develop, so it also will probably take at least a few weeks for us to bounce back. But just on a broader perspective, if we're just looking here at this momentum wave and the money flow, it finally starts to look good. Fuel up higher, RSI is higher, so this actually looks very, very promising, much better than when I earlier thought that this would maybe be the takeoff. this so far looks pretty good in our favor. Then the most important news will be tomorrow. Tomorrow, 7th of February. Jerome Powell will speak. That's around 12, if I'm not mistaken, and you betcha that he is going to say something about the labor market and the unemployment rate. Last week the numbers came out. More than 500,000 new jobs were created, and I think the expectations were just shy of 200,000 if I'm not mistaken. So it absolutely got crushed. Remember when I maybe posted on Twitter all the tech jobs that were lost, and so many thousands of people that lost their job. All of these people combined already, all those jobs that were lost already combined was already filled by just this latest report. Now it doesn't mean that there are new tech jobs, could also be in hospitality or in finance or whatever other sector it is, but just to give you an idea that you maybe see those headlines with all those thousands of people losing their job, but at the same time in all the other sectors there are still so many new jobs being created, and this is not what the Fed wants. They want to see that unemployment rate going up, because if else they also don't really have a still strong case to keep rising the interest rates. Yes, inflation is coming down, that so far looks good, but the economy is just so much stronger than they probably had in mind. Also the labor market's way more robust than they thought, but it is so tight right now that it's just not really working. So they want to have that unemployment rate a little bit higher. Well, not everything moves at the same time. We all know that. For example, mortgages, they move quite fast together with the Fed. So if the Fed starts raising the interest rates today, then you will see that the mortgage rates usually within 2-3 days. But for the labor market, this could have a delay effect of a couple of months. So if the unemployment rate goes up in the next couple of weeks or months, that is then the effect of previous interest rate hikes. So they also notice, of course, this is not rocket science, but they really now want to see in the next couple of weeks, or month or 2 months, that unemployment rate going up. If else, they will have a serious problem, and then we'll see where we then go. Then on Thursday, then the last, at least the last, the other important data comes out is the unemployment claims. I do not expect really a surprise. We know already from last week that the unemployment rate goes down. It's now, if I'm not mistaken, 53 or 54 year record low. So therefore also the unemployment claims will then also go down. So I think this forecast is then also wrong, because if more people find a job, then you will most likely also have less people asking for a unemployment claim. Those two are just, of course, heavily connected to each other. So those are the two most important data points for this week. Tuesday, Fed. Thursday, unemployment claims. I do not expect a huge surprise here, since we already kind of have the data. With that being said, guys, if you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Those links are also in the description. And tomorrow we'll be back and we're going in a much more detailed look on BTC and ETH, and I will show you a few trades that you can take other than the ones that I showed you today. Thank you guys so much. See you next one. Bye bye.